Imagine waking up and seeing a boring healthcare stock suddenly explode 15% in one single day. No meme hype, no Reddit pump, just pure Wall Street shock. That is exactly what happened with McKesson, as the stock ripped to a brand new all-time high near $950. So the real question is simple. Why did this quiet healthcare giant suddenly make investors very rich overnight? And more importantly, is this move just getting started, or is the easy money already gone? Let me break it down in plain English. McKesson is usually not exciting. It is a massive healthcare distributor. Goodness, the predictable cash flow, the kind of stock you forget you even own. But today, McKesson did not trade like a boring stock. The shares gapped up at the open, kept climbing all morning, and at one point were up more than 15%. That kind of move almost never happens for a company this large. This surprised Wall Street, because when a stock like McKesson moves like this, it usually means one thing. Earnings changed the story. Going into earnings, expectations were not low, but they were not explosive either. Analysts expected a solid quarter. Nothing dramatic, nothing that would shock the market. Most investors viewed McKesson as a slow compounder, a defensive healthcare name, not a momentum stock. Then the earnings report dropped, and everything changed. McKesson did not just beat expectations, they beat and raised. Earnings came in higher than Wall Street expected. Revenue jumped double digits compared to last year, and this growth was driven by higher prescription volumes and specialty drugs. Now pay attention to this. The most important part was not the past quarter. It was what management said about the future. McKesson raised full-year profit guidance and narrowed the range. Wall Street loves that combination. It tells investors the business is not slowing down. It is accelerating. That is when buyers rushed in. But here is the real engine behind the rally. The move was not driven by basic drug distribution. It was driven by specialty healthcare, especially oncology. For years, McKesson has been shifting away from low-margin distribution and toward higher-margin specialty services. This quarter proved that strategy is working. Revenue from oncology and multi-specialty services surged dramatically. Even more important, profits in that segment jumped much faster than revenue. This matters because it changes how the stock is valued. Higher margins mean higher earnings quality. Higher earnings quality means a higher valuation. That is why the stock did not just move up a little. It was repriced higher. There is more. McKesson is generating massive cash flow. They are aggressively buying back shares, and they continue to reward shareholders. Long-term investors love that setup. There is also an under-the-radar move most people missed. McKesson officially exited Europe. They sold off their overseas operations and are now fully focused on the US healthcare market. That simplifies the business, reduces risk, and makes earnings more predictable. Investors love predictability. That is another reason institutions were comfortable buying this stock at new highs. For retail investors, today sends a clear message. The rally was not hype. It was fundamentals, real earnings, real growth, real pricing power. And when a stock hits an all-time high after earnings, it usually means institutions are not selling. They are accumulating. Now, let us be honest. After a 15% move in one day, chasing blindly can be dangerous. Short-term traders may take profits. The pullback would be normal. But long-term investors are asking a different question. Is McKesson entering a new growth phase? If specialty healthcare keeps expanding, if margins continue improving, if guidance keeps rising, then today may not be the top. It could be the start of a new leg higher. Here is what could happen next. If the broader market stays stable, McKesson could continue grinding higher as institutions rotate into defensive growth stocks. Healthcare usually attracts money when uncertainty rises, and McKesson just proved it can grow even in difficult conditions. But if the market turns risk off, do not be surprised if the stock pauses or consolidates after such a powerful move. Either way, McKesson just entered a new category in investors' minds. This is no longer just a boring distributor. It is a high-quality healthcare growth business. So now I want to hear from you. Do you think McKesson still has upside after hitting an all-time high? Or is this the kind of stock you wait to buy on a pullback? Let me know in the comments.